Aaron Brown, the poker face of Wall Street. Venture into the fascinating world of poker and its uncanny resemblance to the world of finance in Aaron Brown's book, The Poker Face of Wall Street. Explore the parallels between the poker table and the trading floor as you learn about the history of poker, risk management strategies, financial products, and the role of poker and gambling in wealth creation. Dive into the various poker styles and the pivotal role bluffing plays in this game of skill and chance. Finally, submerge yourself in the age-old argument, often dismissed by economists and Wall Streeters. Is investing akin to gambling?
Poker and finance. The worlds of poker and finance are often compared despite the latter's reluctance to associate with gambling. In reality, poker and trading require similar skills, and many financial professionals love poker. Both games are played for meaningful stakes, but not so huge that they throw off players' judgment. The best play comes from balancing risk and reward. While poker was traditionally learned through playing thousands of hands in private games, advances in technology have allowed players to learn more quickly. Understanding probabilities, short-term tactics, and how to balance risk and reward is key to success in poker and finance. The art of bluffing. Bluffing is a misunderstood tactic in poker that requires one to pretend to have a stronger hand than they possess. It is a powerful competitive strategy that goes against our instincts. However, mastering the art of bluffing requires both parties to assume risk and gain the chance of rewards. To manage risks when bluffing, the author proposes 4 strategies. First, do your homework and calculate the risks using incomplete information, then act swiftly without hesitation with strike for success. Additionally, when the odds are against you, it's essential to know when to surrender and make the tough fold. Finally, you must remember that big losses are not the end of the world, and your crucial assets are your innate talents and character. By applying these strategies, you can become a master of bluffing. The truth about investing and gambling. Financial products come with underlying risks, and investing is a form of gambling. The book exposes the tricks used by financial firms to conceal the risks from investors and explains why the stock market does not always reflect the economy. It also explores the similarities between hedging and gambling and how options and other derivatives function as a disguised form of gambling. The author argues that capital formation requires taking risks and highlights the importance of effective traders in building wealth with little infrastructure. The book reveals the sobering truth that investing and gambling are not so different after all and encourages readers to understand the risks before jumping in. From poker to trading, the evolution of risk-taking. The book describes how gambling has always been viewed as a pointless activity. However, the history of poker reveals an interesting side to it. During the Yukon Gold Rush, poker was a popular pastime where miners could win enough gold from the losers to support themselves for the rest of their lives, leaving the losers to try mining again. Thus, poker concentrated wealth in the hands of a few and thinned the herd, leaving more gold for miners who stayed. Even after the banking system improved in the 20th century, poker retained its significant role as a networking tool and a test of performance under pressure. Psychologists and sociologists studying poker have found that the lure of gambling is simple: it provides excitement and risk without imminent physical danger. Moreover, gambling holds the promise of riches and a life far from mundane middle-class existence. Trading in the stock markets, on the other hand, requires a similar set of skills as poker, computing probabilities and gauging risks. The early traders in the options markets were not mathematicians but expert bridge, poker, backgammon, and chess players, who knew how to judge a player and run probabilities in their heads. The book concludes that it is only a short leap from the poker table to the trading floor. The flaws of game theory in poker and finance. Poker and finance misinterpret game theory by focusing too much on winning and disregarding the bigger picture. Good players know that winning a hand is not the ultimate goal, but instead setting up other players as part of a bigger strategy is key. Players should also shift their opponent's play instead of worrying about cards they can't change. By making fewer mistakes and subtly disrupting their rivals' play, players can boost their chances of profits. Successful poker requires players to master both the probabilities and social skills. Players should make it pleasant for others to lose to them, thus creating repeat business. Finally, players should not ignore the world beyond the table and consider the broader perspective. The rise of game theory led to the win-lose philosophy that has infected poker and finance. However, game theory is a short-sighted approach that ignores critical factors. Instead, players should embrace a more strategic approach that focuses on the broader context, keeping in mind that big winners are rarely invited back to private games, but modest winners are.
The Poker Face of Wall Street highlights the striking parallels between poker and finance, debunking the idea that investing and trading differ significantly from gambling. Risk management strategies and a keen understanding of probabilities, along with the psychological aspects of bluffing, play crucial roles in both poker and Wall Street. Moreover, the book emphasizes that financial products often involve risk, much like gambling, and understanding these hidden risks is essential for successful investing. In sum, Aaron Brown sheds light on the underlying connections between poker and finance, helping us see beyond the surface and recognize the striking similarities between these seemingly contrasting worlds.